Welcome back, and joining us for a look at the day's market moves is Thamsanqa Netha from Shiloh Capital. Thank you so much for your time, Tammy. Let's take a look at what happened in the markets today. Quite interesting moves, particularly on the JSE, as we saw the Resources 10 complex leading the gains there that we saw. Of course, it's coming back after heavy pressure yesterday, and now we're seeing quite a strong rally. Other markets at this point over the panic that they had on Tuesday?
I think short-term volatility is typical, especially when it comes to commodity producers. It also gives us an indication of how to look at forward-looking markets around commodities and commodity supply. The JSE is heavily weighted towards commodity stocks and miners, so movements in them will typically trigger a movement in the exchange. There unfortunately was a negative balance on the other end with some of the financial stocks and some of the construction stocks. But I think in the long run, I think it's a good thing. The mining sector, I think, needs to rebound. Glad to see Sibanye back. I think they were up 5.6%, which is a good thing.
And I know that is one of your favorites, so I know that you are celebrating at this point.
Not yet, not yet.
Okay, not yet, yeah. Slightly though, there's hope, there's hope. People that aren't happy are in the UK because that economy slipped into a recession. So we had a contraction in the fourth quarter of 0.3% after a revised contraction of 0.1% in the third quarter. Was this a surprise at all?
No, I think the nature of the inflation over the last couple of months is indicative of what's possible. I think it's also them detaching from the euro. Now all their problems are theirs, and they need to continue to bring in talent from the rest of the world. So there's significant, especially talent from South Africa going to the UK. And until they correct that integration with the rest of Europe, they correct their integration with the global move, I think they'll struggle as an island on their own.
Yeah, they can take me, Tammy, as long as they promise me that they'll pay me enough so that I can withstand the inflation that they are experiencing there. As we were talking about commodities, let's go into South 32. It posted its interim results today with revenue slumping 15%. Also, that bottom line taking a major hit. Even the dividend was down 92%. And I mean, yeah, it's quite interesting because as we were talking, all the other resource counters were actually up, except for South 32, that share price slumped more than 4%. Were these numbers just too disappointing?
Yes and no. Yes,
Okay.
in the sense that they got operational experience and they should, in principle, do better. But no, in the sense that they've also signed off on this $2.2 billion expenditure that's going to a zinc mine in the US, in Arizona. And they expect that to add to their volumes. So they're targeting a low carbon future, and they're going to spend a lot of money to do so. So shareholders now know that they are not in for any cash in the near future until that's completed. So I think it's more indicative of the capital expenditure they're looking to have over the next couple of quarters.
All right. Before we get to your stock pick, I quickly want to look at Aveng. They did come out with a trading update today. Was it? Yeah, it was a trading update. But what was interesting is, of course, because of the sale of Trident Steel and also just their focus on operations mostly outside of South Africa. They're even saying that they're changing reporting from South African rand to the Australian dollar. The share did surge by more than 13%, actually. I'm wondering at this point if this is a sign of confidence for Aveng's turnaround?
Yeah, so Aveng dealt with three issues. First one was local liquidity. So they've dealt with that by making the share more tradable. Two, they've dealt with their debt. And now three, what they've also done is introduced international liquidity. And if you're in their sector, which is predominantly industrial and construction, you need international projects, you need international liquidity, you need international support, and you need your stock to be liquid enough for you to raise capital, for you to make trades, to buy and sell assets. And I think they've done well. So they've really done a great job in turning that business around. And I think it's going to do well over time. The Australian element, I think, is going to also play some significant part of that, given what's happening in Southeast Asia and predominantly what's going to happen going forward around construction, shipping, and the likes. So I think they've set themselves up well. Focus on operations is always a great thing for management. Always a great thing. When they focus on what matters, shareholders benefit.
All right. Well, let's get into your stock pick for today. Tammy, what are you picking?
I'm picking Meta. I think Mark Zuckerberg is been ruffled a bit by Apple, so I think he's now going to start focusing again on making sure he offers a valuable product, offers products to the world, and he makes them profit generators. So I think there's going to be quite a lot of movement on Facebook's side, and I think Zuckerberg doesn't want to yield any of the markets to them. So that's a good move and a good indication for us.
All right. Well, thank you so much for your time and for your insights on what has been driving investor sentiment today. That was Thamsanqa Netha from Shiloh Capital.